Good morning, everyone, and welcome to the European crossover webinar and the start of the week. And let's move this out of the way. I'm trying to say good morning to Nitish and typed over that. Okay, we're seeing the euro just work up just a little bit higher. Obviously, the dollar pared back just a bit. Also, if we take a look here on equities, and I think that's going to be a key here. Let's move into that. We're just easing just a bit here, and we've seen this market just continue to stay on the bid. Obviously, at the forefront has been this U.S.-China trade talk, and I think that's going to be a key. And you can see here the crude oil just easing back a bit, I should say, here. And to me, I think it's an important story here. We had the administration talking about we're close. I've seen some comments from some people like Ivan the K. That were saying, tomorrow is one step closer than the previous day, so to speak. The day after that is one step closer. And I think it was Larry Kudlow that was on the Sunday morning shows as far as political shows saying they're getting closer, but there's still substantial work to be done. And I think that's going to be key because I think, at least I believe, and not, there's been times where, we've all been frustrated with how Brexit has dragged on, other things have dragged on. I think here at this point, we've had such a phenomenal run here, back here in the S&Ps, is that I think maybe the market might be starting to grow a bit fatigued as to when supposedly this thing's going to go on and take place. And I think maybe the market, it's going to be interesting to watch. I believe over the next, and seems like a long time, over the next 3 days, I would be watching the reaction of the market. May not be 3 days, may only be 2 days, but I'd give it 3 days. I think we may get to a point where people are starting to now, instead of looking how much further something can go, or what if we hit all these stops, i.e., let's see the Aussie and we move up, is it, and now people are thinking, okay, it might be a buy the rumor, sell the fact. This might just be just a sell at the point where the market, and I don't mean out of from my own personal opinion, it just might be that the market just might be getting a bit tired up in here, thinking, at what point do we just keep waiting and waiting and waiting? And you might start to see people going and take in some protection before then. And reminds me of the saying, or the thought is, what if you threw a parade and nobody came? Okay, and that's something we might, and that's my thoughts are, is watch this over the next 2 to 3 days, and we might get to a situation where the market may really just begin to start discounting the whole thing. And I'm not, like I said, putting in my own personal point of view. I'm just letting the market do the talking. Not that we're seeing any changes now, but Trump made his take, and then the Chinese president basically did a Trumpism. We're close, we're very close. But then, of course, like I said, Larry Kudlow was on the weekend shows saying we are very close, but there's a lot of work to be done. I think the market might get to a point where it's starting to say, you know what, the boy cried wolf too many times, and we may not, see any further advance. It's why I'm thinking is keep an eye over the next 2 to 3 days and see how this market reacts. And we may start to see the market then beginning to start to discount. And what ended up happening is maybe the S&Ps might end up like, I think Blake had mentioned in the weekend outlook is, could the S&Ps pull back? He even said, maybe 50 handles, which wouldn't be very much compared to how far we've come. But my thought might be is we might start to see these S&Ps start to sag, where now, if they ever announce the news, it might even be a chance to even take out this high here, much as to add on further gains. But anyway, that's my take on that. Looking here at, let's go and take a look at the news here. And there's not a whole lot of news. And they'll get on the stories and get onto the analysis. Well, we saw German trade data continue to come in weaker. And one of the things that we've looked at is even though we've seen some surprises on a little bit on the Italian side and um, the French PMI not as weak as you would think, but the one that's been leading this whole show lower has been Germany, and boy, it hasn't been lower. I mean, it's just been catastrophically lower. Okay, I think it was at the PMIs where, I think they were looking for them to at least even out a little bit, and not only did they not even out, they dropped even further than the previous month. So it continues to go on and sag. Now at the bottom of the hour, we're going to have the Eurozone Centex index, and then after that we have Canadian housing starts in the U.S. session, was going to be 8:15 Eastern time. I have my information here, set up on Central Standard Time. With that, let's go on and move in now to, hang on. We'll move into the stories and then quickly get into the analysis. Generally, we'll only go on and do the morning edge, morning bid, and then one story. But there was a reference here on the euro, so we'll get to that here. So it'll be one moment. So in the morning bid, heading towards the latest deadline on Brexit this Friday, the three main scenarios, a deal-based exit, no deal, and no Brexit are all theoretically in play. Talks between the government and opposition Labour Party to reach a cross-party compromise will continue today, with some murmurings this morning that Theresa May is ready to move on to Labour's demand for custom unions, although she won't call it that. In parallel, the Lord's upper house is likely to pass a legislation effectively ensuring May will seek an Article 50 extension in the event that no agreement is reached. It's an automatic that EU leaders meeting on Wednesday will grant the extension, although there's also a sense that they do not want to be blamed for the mess if Britain does crash out of the club, and notably the harm it would inflict on the heavily exposed Irish economy. Hence, while France's Emmanuel Macron is talking tough about what the UK must do to deserve an extension, he has said the EU will never let Ireland down. One of the reasons that Brussels wants to avoid a chaotic split with Britain in coming days is the bad PR that would create ahead of next month's European parliamentary elections. Italy's Eurosceptic anti-immigrant Deputy Prime Minister Matteo Salvini is due to launch his campaign for those elections in a hotel in Milan today, accompanied by much talk of him trying to build an alliance with others on the far right. He has done some social media with Austria's Heinz Christian Strache, apparently on a smiley texting term with France's Marine Le Pen, but so far there's little evidence of a united platform or joint campaigning. On to the markets. World markets have eked out 6-month highs. First thing Monday, they were more hesitant in making new ground. MSCI's all-country index was only up 0.3, even though it closed at its highest since early October. The warm glow from Wall Street, where the S&P set another new high after a 7th straight gain on Friday, has held overseas market up a broken new little ground. Friday's new U.S. employment report encouraged the bulls by showing an above forecast rebound in jobs growth, with subdued wage growth unlikely to stir the Federal Reserve from its well-flagged policy pause. What's more, some of the markets are starting to speculate about whether the Fed may even start debating the next interest rate cut, with President Trump and his White House advisors last week lambasting the Fed for over-tightening monetary policy and calling for both an instant interest rate cut as well as quantitative easing. I don't want to go any further on this. Despite widespread expectations of another target in cut in banks' required ratios by the People's Bank of China this week, Shanghai stocks ended lower, with little news, fresh news of progress in the U.S.-China trade talks emerging over the weekend. And this one I'm talking about, folks, is that, and it's not my take, because I know a lot of us are very weary over the whole Brexit thing. Well, and, we're getting pretty weary about the whole China thing, but I'm thinking here, and like I said, with little fresh news of progress in the U.S.-China talks emerging over the weekend, Hong Kong stocks were marginally higher. Well, we did have some holidays during this last week. I think there might be a little bit of a catch-up, says Tokyo's Nikkei, slightly in the red. I think this might be maybe I don't want to say the turning point, but I think we're getting to a point where now, as I mentioned, the market's going to start saying, hey, put up or shut up. And I think, like I said, and that's not me doing the talking, you doing the talking. I think it's going to be the market doing the talking. So, as I said, watch these S&Ps and some of these equity markets over the next 2 to 3 days, and let's see if we don't start to see these markets start to sag and how they may affect other markets. We've seen the dollar yen per se even pull back some here. Let's see, and the drumbeat of poor European economic data continue with German exports and imports both falling more than expected. And as I said, we're seeing the German Germany or the German economy, which is considered the real freight train, the engine of the eurozone, really continue to sag here. And it says euro dollar held firm above 112. So let's just move on here. In regards to the euro per se, the euro sat at a 1 month low last week as investors grew cautious about the outlook for the currency. And the ECB's meeting this week. Traders cut their long positions by the biggest margin in 9 months last week, according to weekly positioning. The core European bond yields entered a negative territory as PMI data indicated a Eurozone economy struggling to gain traction. We're seeing more Euro skepticism in the market as expectations of the ECB rate hike has changed from the foreseeable future with no firm timeline in sight. While the single currency was slightly higher on the day at 12.28, it remained within striking distance of a 1 month low of 11.83. No policy changes are expected in this week's ECB meeting, but the press conference afterwards will be in sharp focus on talks of tiered rates to see pressure on banks, global recession fears, and a sense of alarm that pushed 10-year German bund yields below 0%. My take is, and it's not like as if we've been having, I guess, for about the last 2 weeks, our target. And as we start the week, when we do the analysis at the beginning of the week, kind of gives an outlook, for the week outright. Not only as I think the market may start to tire on this whole U.S.-China talks and might be one of those put up or shut ups, but also this whole thing where the euro may be close to a bottom and we're trying to see some type of rebound. The thing is folks. Germany is the hub. It is the engine. And if that engine is not only going forward, it's not even in neutral. It's going in reverse. And not only in reverse, but going in reverse at quite a good clip. I don't see how the euro is going to be able to maintain this area. And I'll give it to the euro that it's been able to hang on. But we just may see after the ECB, this thing may really start to slide. We'll see. But like I said, I don't, foresee anything that looks positive here for the euro other than we're just holding near these lows. Now let's go on and move into the dollar. The dollar sags as bond yields slip and Brexit in focus. Dollar sagged on Monday as bond yields extended their decline after the U.S. jobs report. The closest watch released on Friday showed non-farm payrolls by a solid 196,000. The dollar index against a basket of currencies inched down 15 tenths. The Fed can either cut or hike rates in light of Friday's jobs report, which does not provide the dollar with decisive incentive. The Sino-U.S. trade talks don't look to end anytime soon, and the market will drift to Europe this week. This is not good. That's what I'm saying is, I didn't even read these stories ahead of time, but my point is this U.S.-China trade talks, that thing is old as Methuselah at this point. And the point is if we were just hanging around near these lows or just a little bit higher, marginally higher, that'd be one thing. But we're over here setting new highs at higher and higher and higher. And with what? There's nothing to show for it. You see, at some point, you're going to say, hey, put up or shut up. And my point being is that I'll let the market do the talking, but I think this week is going to be, I think the first 2, maybe 3 days through Wednesday is going to be important. But I think this week will be very key because, like I said, I'm beginning to think that we may start to see these markets start to pare back, as this even says here, is that there doesn't seem to be an end to this anytime soon. Because, like I said, despite the Chinese president giving his Trumpian take, which is it's very close to, the truth of the matter is it isn't. And that would be fine, although it's exhausting, it's waited this long, but the market has been kept adding and adding on to this. And we may get to a point that the market may just say, no, no more credit, no more credit. Either you pay up, which shows something, or no more credit, meaning advances that we're seeing here. So I think it's going to be very, very key. So with that, let's go and move on to the analysis. But I wanted to lay the foundation of what I'm looking at. Moment. And let's take a look here with the euro. Okay, says your target remains 1149. Pair requires a daily close above 1291 to minimize a down pull. A daily close above 1340 would allow a challenge of 1445. Well, that analysis is fairly simple. And I tell you what, the outlook remains quite dour. I mean, you could make the case, okay, well, maybe you have something here and you could look at this as partially like an inverted hammer. We're oversold, but folks, it's going to take a move. Let's be honest. It's going to take a move above 1294. Like this would be helpful if we could get above 1260. And I'm just looking at the technicals. Like I said, I've made the case as to why looking at for this week, I think this week is important. I do believe it is important. I think that this market has extended a lot of credit. And I mean credit like as if you were on a credit card or whatever, has extended a lot of credit towards this whole talk about the U.S.-China talks and why equities. It's not just the U.S. market, too. It's been equity markets across the board. And guess what? There's still a lot more work to be done. I thought we were really close, and it looks like it isn't as close. Now, Trump has given his, extra juice by saying we're close. We're very close, although he says it could happen next week. It could happen next week. It might take even longer. And then, surprisingly, the Chinese president jumped in on the same thing. I think was it Thursday or Friday or late Thursday. Basically said the exact same thing. Now he's jumping in there. But it looks like it's not anytime soon. And the problem is we've rallied a long ways. And I think we might be at a juncture where the market might start to discount in the sense of, disputing whether, not disputing, but discounting what will really happen. Now, that being said, to reiterate what my thoughts are, overall, as we look at this week, nothing's changed here with the euro in the sense that I'm still looking for at least 1149, but we could end up crashing on that. The reason I've left this area here with the 61% and thinking, well, God, they already got down there long before. We crash out of that thing and we could end up going a whole lot lower here. And so 1149 is your initial target, but if we break past this and we might start to see a real quick deterioration, and that may come after the ECB. But the thing is would this be helpful if we close above 1260? Yeah, but we're not going to slow this downside momentum unless we get a close above 1291. And frankly, with Germany deteriorating, I just don't see where it's in the cards. Now, I'm just looking at the technicals, but the thing is, you need a catalyst. And what is that catalyst going to be? And like I said, the news out of the Eurozone economic data, especially with Europe, with Germany, is just simply dour. So I just don't see where we're going to be able to get to 1291. Can you see a bounce up here in the market, a little bit oversold? But again, like I said, I just don't see it. I'm still pointing for 1149, and it's going to take a close above 1291, and the immediate resistance is going to be daily close. It's going to be this 1260. So let's go on right here. Now, the 1278 was because in case we saw a surprise with non-farm payrolls, but it's going to be 1260. And resistance, support 1193. We're not going to play around with if it's 1217, 1206. Look, folks, if this thing's going to break lower here and we get below this 1193, it's Katie bar the door. I don't think this market's going to play around. I think we're going to hang around here. We may even hang around here for a couple of days. But I think that with the way things look so yeah, I hate to say the same word again, dour. But the way things look now, with Germany leading the way, and it's not like I said, it's not like they're not performing. It's not like they're slightly missing or barely holding ground. I mean, they're not only missing, they're even gaining momentum on these misses. And that one PMI was just absolutely abysmal, even below 45. So the thing is I don't see. I have to be honest. I have to commend the euro for even being able to hang on this area, because I really think that at this point it's just going to break lower here. Where it just won't be able to hold up. And what may even somewhat lead the charge is if we do start to see equity markets and start to break, then you'll lose that risk on, and it's just going to increase the potential for this thing to move lower. Anyway, that's my take on that. Let's go on and move into the cable. Cable continues to defend the 2980 pivot, two consecutive daily closes below 2980, which is what we were looking at last week. Below 2980 with target 2557 with support on the break at 2908. Market needs a daily close above 32.14 to turn the momentum higher and eventually challenge 33.40. So let's take a look where we stand here with the cable. There's that 29.80. And, we know that's a pivot here. And generally, if you break above it, you keep on going. You break below it, you keep on going down. It swings the momentum back and forth. And this thing, we've had this 29.80 for a long time. I mean, a long time, probably at least a couple of months. And the market continues to defend this thing. Now, what we're stating here is that on a break here, let's go back, would be our 2908. And same thing with this whole thing, with the whole Brexit thing. We can make the case initially, like I said, on this break, it'd be 2908. That's what we're looking for initially before the market would eventually really drop. But we're just going to respect the technicals at this point. So it's going to be 2980 for support. Mondays can always be a little bit tricky. So let's see what we hold up. So we're going to go with 2980, the pivot. And support resistance. For right now, is going to come in right there at 30.95. That I heard somebody in the background. I don't know if someone turned on their mic or something. Let's go and move into the Aussie. The Aussie remains in a holding pattern with a daily close resistance of 71.35. Successful conclusion of U.S.-China talks should allow potential rally to 72.72, but the key will be if the market can sustain two consecutive daily closes above 72.33. Support comes in at 70.27. Well, I did this analysis early on, and as I mentioned to you, and here's that daily holding pattern. You see here, we're just basically like in a holding pattern, but this and yeah, I think we could make a run here for 72.72, but the key would be, could we get two daily closes? Well, you know what, this U.S.-China talks conclusion, it's beginning to look a little bit further and further and further out, and I think the market may begin to start to lose its patience here, as I mentioned, and we may get to a point where the market may just start just outright discounting it, and where you might start to see the market start to sag. And then if we eventually get the news, if we even challenge the highs, forget going to new highs, and I'm talking about this, if we do even challenge those, if we do see a respectable pullback, and I think that's what possibly might end up happening here. Now, but focusing here on the Aussie, well, we're just going to keep it simple at this point with the speaking technically speaking, I would call it like that. And that would be 71.82. That's just going to be a resistance here. But I think the risk is going forward this week is going to be for slips. Support is going to be our old friend.
Can you hear me? Hey, man.
Yes.
Hi. I think you're showing the wrong screen, mate. You're showing the screen with the 8 charts, and we're not seeing whatever analysis.
Okay. Thank you very much. Thank you very much. Okay, no, appreciate it. Here's the Aussie.
Okay, great. Thank you.
Okay, great. Thank you. Okay, getting back here, and I'll do a quick overview with the euro, just in case, and the cable, in case that was on the wrong screen. But as I mentioned here with the Aussie dollar, we're just on a holding pattern here. We're going to keep it simple with the technicals, which is 70 right here. We're going to call it 71.81, and the support is going to be our old friend 70.27. We'll keep it simple right here. Now, in case, let's move back here. 70.27. Make sure that we're both on the same page. Let's go and take a look at this euro quickly. And here's the euro. And as I mentioned, I think that eventually we're going to get here to this 11.49. Now, referencing back here again, is that, look, this will be great if we get above. Let's take a look at just from, and I'm looking at the closing, the working the daily, and the closes 1260. We know this 1260 has been like a rock over the last couple of weeks, but that'd be great. And I think that the most that we could even push to is maybe around here before I think we eventually start to ease back against the ECB. But look, things don't really change unless we get above 1291. That's what it would take just to negate the downside. Look, you can get a close above 1260 if you could. I'd be surprised if we can. But if you did, it doesn't change the downside pull. That's what I'm saying. And once again, to reiterate, I'm not looking at fundamentals per se, although I like to incorporate them in the sense of, what are catalysts to move this market. But simply, I just don't see the catalysts that are going to, yes, we're holding here, but I don't see where things are going to change for the euro, especially when, as I said, the hub, the engine driver for the Eurozone, Germany, is forget not gaining, forget not holding its own. It's not only losing, but it's accelerating with this economic data onto the downside, and that's very concerning. So I think that we could end up seeing the euro come back a lot lower eventually. And I think this week is going to be key. Moving on, and so like I said, we already put the technicals there, but just in case we weren't seeing the right screen, let's go and put in the cable real quick to see where we're there. And as I said before, Hang on. 2980 has been the pivot, and it's been the pivot for literally, like I said, for about a couple of months. And you can see how important this 2980 has been. There we go. You can see the significance of 2980. And we've been bumping along this thing for a while. Look, that's going to be our support, 2980, keeping it simple. The resistance, and we'll look at the 2 hour real quickly because there wasn't anything significant on the daily. Looking at the 2 hour, just to recap again, because I was on the wrong screen, is going to be right here at 30.95. That's your first area of challenge. I have no idea what's going to happen with this whole Brexit thing, where we can swing to the upside, to the downside. I really don't. I'm just looking like the straight up technicals on this. Now, as I said, we already went to the Aussie. We'll take a look at the Kiwi. And you can see we continue to push lower here. There's different reasons with the Kiwi. Obviously, the RBNZ has changed their policy stance. But the thing is that even from last week and with the Aussie, notice how I said we were in a holding pattern. The RBNZ continues to break down. We're not seeing these two guys, to me, in a sense, they're almost like the canary in the coal mine, because if we're getting some kind of good news in China, you would think we'd be jumping up around like they look like an electrocardiogram. Okay, well, get a little bit of good Chinese news, they jump up, then they say, oh, reality is that the RBNZ policy has changed lower. We come back down. Same thing with the Aussie. It jumps up. Oh, wait a minute, data's not as good. Okay, we come back down. We're not seeing any kind of a jump on any of these Chinese news. Just like these guys are like, you know what? I've seen this movie before. You're not fooling me. We're sticking to where things are, and that's my concern. And also, more so, like I said, on these, which are the Kiwi may not be as impacted as the Aussie. Quite often, people will trade the Aussie as a proxy for China's stocks, but you're not seeing any of this being reflected in those currencies. Obviously, like I said, we've broken down here with the Kiwi. Resistance on the Kiwi, well, it's going to be right here initially, and it's not very much higher here at this point. Let's take a look here. It's going to be right here. If we're going to break a little bit higher, and it's going to have to be all the way back up here to 68 cents. If you're not picking up on something that's pretty obvious, my whole theme is this week, and like I said, I don't have a dog in the race, dog in this fight, as the saying goes. Right now, I'm flat. I don't have any positions. I don't like to carry things over the weekend. I'm not one of those, like I said, a lot of folks in the hold the positions a lot longer. Me, I like to just come in fresh a week and see where we stand from there. So I don't have my point being is I don't have an axe to grind, but my thinking is, and like I said, not from my own personal viewpoint, but I think that these markets are going to start to do the talking. And I think that this whole bit about the China thing is getting long in the tooth, in the point that the market's given a lot of leeway or credit to these markets to move higher, i.e. the S&Ps. And it's not just that, but I think you could see some big changes here with the yen. You could see some changes, obviously, maybe a further breakdown with the Aussie. And so I think these are things that you want to focus in over the next 2 to 3 days. It doesn't have to be something that's going to happen on Monday morning, but keep your eyes open for something like that, because I think that's a stark possibility. Support here is going to be right there initially. It's going to be right there, 66.95. One of the things that we did load up in here, I had on here, you can see here the New Zealand yen. I'll make sure I change the charts back. So I apologize for that. The reason I've done it this way now is it's trying to keep all 3 charts on one page. And then if something starts moving while we're on an hour-long webinar, I don't even end up seeing it. So apologies on the mess up on the chart page. Let me move into the New Zealand yen, which is a new pair that we're starting to follow now. And once again, on these cross rates, I'm really looking at things on a very short-term basis. So let's go move into here. And it's not a pair that I've ever traded before. We do have a little bit of support right here. You can see here, just right coming in here. They're defending this whole little area here. So maybe we see, and like as I mentioned, things are starting to change a little bit differently with the yen here. Resistance to me, resistance is going to come in right in here. If we make a run back up in here, come in right there. It's not even very far, to be quite honest with you. But this market doesn't seem to move, well, other than the initial fall. But if we were to go on and come back, I'm looking right there on a very short-term basis, coming in right there at 75.36. 75.36. Let's go with that. And we're looking here on the 2-hour chart. If we break lower, real support's not going to even come in until about 74.40. Right there. Thus, we've got some volume coming in at that point. Let's go and move into the dollar CAD. This market has held up remarkably well. As I mentioned before, last week I was trying to pick it up. Was it 32.92? I got a little bit too greedy. Remember we were looking for that move down to 33. I mentioned two buy areas, 33.22. We got there in 33.08 and finally 32.92. That 33.08 was great. I got a little bit too greedy trying to pick it up there at 32.93, and I think the low was, what was it, 32.97 or 98. And then from there, we really turned things around and moved much higher. Let's go and move into the analysis here. The dollar CAD has held up exceptionally well in light of the new highs in WTI. The pair closed above daily resistance at 33.54. If crude pairs back, this market could possibly take out 35.04 in one session. Initial support comes in at 33.30, followed by strong demand at 33. So the key thing with the dollar CAD was we were able to get above this 33.54. That was key. Let's pull this back a bit. This was key. You see how we were able to go on and get past this 33.54. Hey, we're pulling back a little bit, but that's probably a little bit within reason because not only did crude move higher again, it's still on the bid, even new highs as we're speaking right now. But this market's held up remarkably well. And when they've tried to push it lower, it finds those bids lower. So we're going to stick with that. We're going to go with 33.30 for our support, which is about 40 pips lower. Initial resistance on this upside, and we'll take a look on a 2-hour chart. Really, it has the possibility to jump up to this 34.15, and we're going to go with this 34.15 for our resistance because I think the door's open for them to continue to keep pushing a little bit higher here. Now, as I mentioned before, looking on the daily, if we see a slip in crude, and like I said, I think it's important to watch these markets over the next 2 to 3 days. I think we can get to this 35.04 without any trouble. And I was being sincere and saying, let's say we're here. If crude were to slip a dollar and a half, or something like that, I think we could rip up here to 35.04 and no problem whatsoever. It could even take place in the same session. That's how much demand I believe. The dollar cat had multiple opportunities to go in and break lower. I remember the prior week I thought it was going to break somewhat lower, didn't. We rallied up here. Okay, it's failing again, and then we couldn't even take out 33 without any real gusto. So this market is poised. It just has that good underlying bid tone, and why I think that we could rip up here to 35.04 without any trouble if we get some cooperation with crude. But initially, it's going to be right here at the 34.18, and we'll use 34.30 for our support. There it is, 34.15. Let's go and move into the to the peso. Well, we saw a nice little bounce here in the peso. I was a bit surprised, although we have some. I think we can work a little bit lower here. I was surprised. I mean, to me, if you were long, I think this would have been a gift on this run up we just had up here to 1912. We shall see. Let's look at the analysis. Says the dollar peso should begin this week under pressure after finishing the week with a poor technical picture. Initial support comes in at 1902, which is a 61% of the entire move of 1875 to 1948, with a potential drop to zone 1890.92. The pair needs 2 consecutive 2-hour closes above 1920 to initiate upside momentum. So let's take a look where we're at here with the peso. I don't even know how these got moved out so far over here. So I think we can, and my thoughts were that the way the market finished out, we can probably push lower, at least initially. Actually, we saw a bounce come in here, but I think as the doors open, we can move down here to this 1902 is a 61%. But if we slip any further on this peso, you can see right here, we could go on and make a break, even as low as 1892. But I tell you what, we finished the week. I mean, not finished the week, but we did finish the week in a very poor picture. And I thought, why initially the door would be open to testing this 1902, and then we'd see if we can hold in here. But we've actually seen a little bit of a rally off of here to start out, in the early trading for the week. A bit surprised by that. So we'll just go with this 1902 for support here right now. 1902 and resistance comes in right there at 19, looking right there, 1914, 1902.6. until it changes, and it might change it soon, but hasn't done it yet. Let's go move into the dollar CAD. Not dollar CAD, but dollar yen. I apologize. The dollar yen continues its advance, falling short of closing above 1187. Two consecutive daily closes above 1187 will set up a challenge of 1384. Initial support is 1136, followed by 1095. 1095 was key, and the dollar yen is actually one of the ones that we're looking at where the market could have advanced, and I think we found people that have been caught on the wrong side of the market. And I think, several people are thinking this thing's about ready to rip. It's about ready to rip. Well, we made it up here to this 1187. Well, we stopped short of this 1187, but and it'll probably be easier to see this because this big old long wick that caused a lot of. Wish that thing wasn't there, but here's that 1187. It makes it a lot easier when we look at this on the 2-hour chart. We couldn't take out that 1187, and we've already sagged here to start out the week. And the thing is that the BOJ, they were already talking a little bit about maybe making things a little bit easier and a little bit easier money. That was last week, and we've been moving higher, but we're not gaining that extra traction. And when we're even coming to NFP, my thought was, hey, watch this 1187, watch this 1187. I thought they might be able to take it out, but I said the key will be, can they stay above it on a 2-hour close? Well, they didn't get to this 1187, and the 1187 is a key daily level. Look, we pulled back. I did put in here that the support was, let's go back in here. Initial support, 1136, and the low on this was 1135, so off by 1 pip. But this is one of those that I think is going to be key to follow, which is, let's see how this market reacts, because I think this is one of the pair also that I'm looking at that's going to be saying, hey, you know what? I'm a doubting Thomas. I'm losing my faith in your whole U.S. China talk stuff. Look, the yen's there's nothing to say this thing is reversed or anything, but when you think about where the S&Ps are and how other things have developed, this thing should be trading realistically probably by 1230 to 1240. We have moved higher, and they put the short's feet to the fire, but we did not get above that 1187, and we start out the week pushing much lower here. Actually, good 40 pips lower. That's nothing to sneeze sneeze at. And what I mean by that is something to, at least, if nothing else, the caution light should come on. And you say, wait a minute, let me just keep an eye on this and see what's going on here. I thought we might have been blasting above 112. We didn't take out 1187. We start out the week and it's 40 pips lower. Let's just see what happens. And this is one of those markets that I think you ought to keep an eye on it over the next couple of days to see how it reacts. As I said, I think because I think we may be close to a pivot where things may end up changing in a dramatic way, where, let's say this market were to come down to here, okay, oh, they announced the China news, and then we jump up, but we don't even take out the highs. And I'm thinking you can compare that to that, you can compare it to the Aussie, you can compare it to the S&Ps. So that's why I think these next couple of weeks are going to be so important. So we did already put our support there at 1136. We'll stick with that, 1136. The low is 1135. Now, whether we eventually break, we'll know that. And resistance is going to be 1187. That's key daily resistance. Let's move into the cash dollar index. Dollar index finished Friday with another positive daily close. Weekly resistance is 97.89, which is confluencing with the 61%, and remains in play with initial resistance at a 97.66. Support is 96.81. Cross currents with interest rates, risk on, and U.S.-China talks create a tug and pull atmosphere. Keep the focus on the bigger levels. So let's see where we are here with the cash dollar index. So here's that 97.89. It's a key weekly level. We've already been discussing about this for about a couple of weeks already. You can see that right there. Huge weekly level. It also happens to confluence with 97.89 being the 61% of the move, all the way back from 88.29 to 103.83. Let's go and move it back into the daily. Now I pointed this arrow out because you can see here is that we had this little gravestone doji. I'm about ready to write the epitaph for the dollar index, and we come right back and we finish. Look at Friday. Not only did we finish the highest we've had so far, we also took out the close here. Now we're pairing back, true, but the point is the door's still open for this market to potentially move higher. Now, in the meantime, look, that 97.45 we had that marked off about a week ago or whatever has held up overall well. But the key is going to be this 97.66 for right now. And actually, when you look at it here, look at it's 97.64. We've had it marked pinned as 97.66. So it's going to be 97.64, but the door's still open for this market to eventually resolve itself higher. So hold on. Support, there it is, 96.81. Keep it simple. That's what I'm saying. Just focus on these bigger levels. So it's going to be 96.81. Moving on to the gold market. Gold has defended the 1280 despite the sustained upside of the dollar index, and the advance of equities. Technical levels are clear with immediate support at 1280 with a break that would lead to 1267. We've been talking about that. Immediate resistance is at 1304 with a pause after stops are hit at 1309. So to me, it's pretty clear here. We did defend this 1280 with a little mini hammers. The resistance, it comes back in here at this 1304. Here, let's move this here. But I think that if we were to see anything popped in here, it'd run out of gas right there at 1309. So for right now, immediately speaking here, we're just going to go with our friend, the 1293, our old friend 1293, and we'll go with 1280. Now, the immediate key resistance is 1304, but for right now, 1293. The 1304 will kick off stops. And these bigger levels were because of NFP day. And let's go into our cross rates. And when I'm covering these, and you see here, I'm using the 2-hour charts, they're just very short-term levels that I'm looking at. So I'm not looking on the bigger picture, looking at daily or weekly charts when I'm looking at these cross rates. So right now, the immediate resistance, you can see that clears a bell It's 86.37 right there, 86.37. Nothing remarkable with this euro pound that I can see per se. So go with 86.37. We've tried to hold this area as we've broken higher. The key is going to be right there at 85.70. It needs to go and hold this area right there, even just a little bit more room. 85.68. 85.68 is key to go and hold for this market. If we make another dip lower, test that, they need to hold that 85.68. And what you want to do is just incorporate this into your own outlook of what you're doing with the trading. But my whole focus on these is just really from short-term trading, looking at 2-hour charts. We'll move into the euro yen. Well, we held this 25 area here. We got above it and opened the door for us to challenge, and we came not too far away from the 61%, and we eased back once again, revisiting the 25 area here. I had this marked over earlier on this pullback for the 23%. They held this area and more importantly held this 125. Nothing has changed here. It's clear as a bell. The key level here is 125. We're going to go and remove the fibs. So it's going to be 25 even here on the euro yen. This upside right now, there it is. Well, we've already made this move up here to 25.30, and they've held here. They've held, and they've done a pretty good job of holding. The challenge, and if we do see with the yen, is going to be right back in here, and that's not even that far. Boy, we're trading a very, very, very tight range. But if you're dancing around with this euro yen on a scalp basis, it's going to come in, and that is so close from here. We're going to open up the door for a challenge. If this market holds and we get a break above here with the euro, maybe try to strengthen over the next day or two, it's going to be right up here at 25.60. 25.60, and that was a 61%. That would also take out the highs here. So we'll go with 25.60. And we already had that there. Okay, let's go move into the euro odd. Well, we've broken out just above, but here we are giving it back up all over again. So the break to hold this thing up is going to be right there. Needs to defend this area here. If we break lower, right there. For starters, and that's also the little breakout area here. So it needs to defend this area right there. 57.88. If this is going to hold, but there's certainly the door is open for this to go in and break even further. But this is where this volume comes in right here. If you're playing it from the short side, then you'd want to go in and cover some of your position right here at 57, right there, 57.87, 57.87. If we end up breaking lower here, right now we got to defend this 58.08. But if we break lower, and maybe let's say it's a partial bit of a just hitting some stops, it's going to be 57.88 for that initial support. On the challenge back, going to find some good resistance right there. Before we can get even challenge those highs, will be 58.53. If we could take out those highs, you'll see some folks come in and gladly, let's go 58.55, 58.55. Gladly drop off a good portion. This market certainly looks like it's poised at where it wants to go much higher. Look after breaking this. Initial resistance here is going to come in from a volume standpoint right there. 67.82. Now that's a good 100 pips away. Right there, we take out these highs. We'll go with 67.36. Hang on. Come right there, 67.39. Playing for the long side, that'd be a good target right there, 67.39. Initial, one of those targets on the way up. Certainly, this market certainly looks like it wants to break higher, and we may get that opportunity if the euro starts to add on to its gains to start out the week. Although I think that we may see a different story as we finish towards the end of the week. Moving on to support. $66.25 for support. $66.25. Aussie yen. Now I've already seen a pretty decent little pullback on this, and this one, another one that we're talking about is that. Get rid of this. And this one had a nice little response, but it's same here is watch this on the way back up. A lot of different, some cross currents here, but once again, it's not buying in as much to the whole U.S.-China talk. Equities are going from here to the moon business. Watch this on the way back up. Key resistance is going to be back to our old friend, 79.39, right there. 79.39. Right there. Support comes in. This is actually good support right there. It held right there where it should have. Well, actually a little bit higher than I would look for 89. So it's actually right there. Let's go with 78 right there. 78.83. This market is trying to make a hold here, and we have the opportunity to eventually break a little bit higher here. That initial resistance is going to come in right there at 46.09. 46.09. If they pop back out of here, that's where I want to make a run to, 46.09. We've got some decent volume coming in there. If we break lower, you'll probably see some buying come in only because they may be thinking, what if it's a little bit of a fake out? Things have been so crazy with the pound anyway. So look for some support to come in right there at 45.03. Boy, this one is just hanging on like nobody's business. Support, keeping it very, very simple right here with some volume comes in at 83.37. 83.37 right there. Can we break higher? If we do, there's volume right there. 84.52. If we do, actually right there, called 84.53. This one's tight as a drum. Look at this. Just no movement whatsoever. I mean, this is just almost like watching paint dry. If we were to break higher, we're just going to have to go with this level up here, which is the 94.63. A break on this front support at 93.05. And there's the bias chart. I'll get that posted in the room, and thanks for joining us here on the European crossover webinar.